My name is Chuck Whitman, and I build great traders that lead great lives. Traders I've trained have generated in excess of $1 billion in trading revenue and are found at some of the largest proprietary trading firms and hedge funds in the United States. We're going to go back to the basics. We're going to talk about the basics of candlestick patterns, candlestick charts. We're going to go back to the basics. We're going to talk about candlestick bars. We're going to talk about why do they matter and how to read them. Understanding candlestick structure and market psychology. In this lesson, we're going to understand the structure of candlesticks and how they represent price action. We're going to learn how candlestick formations reveal trader emotions in market psychology. We're going to identify the relationship between the open, the close, the high, and the low prices in candlestick analysis. And we're going to use candlestick patterns to anticipate potential market movements. So why do candlestick patterns matter? Why do you think traders use candlestick charts instead of line or bar charts? The reality is they provide more detailed price action insights than other chart types. Candlestick patterns are not just shapes. They represent market psychology. We're going to show you a simple price chart using a line graph, and then we're going to show you the same chart using candlesticks. I want you to look at them and see which one gives you more information about price movement and why. Here is just a line chart, close to close, and here's a candlestick chart. Which chart gives you more information? When we look at a candlestick, we look at the anatomy of a candlestick, it becomes the building blocks of price action. Every candlestick represents a battle between buyers and sellers, and the size and the shape of the candlestick reveal important details about the momentum and the sentiment. Let's talk about the components of a candlestick. Every candlestick has an open price. This is where the price started in that time frame. It has the close price, where the price ended. It has a high price, which is the maximum price reached, and it has a low price, which is the lowest price reached. It has a body, which is the difference between the open and the close. This relationship between the open and the close is going to indicate whether there's buying or selling strength. And we have the wick or the shadow. This is the price range that's outside the open to close zone, and it shows rejection. You can configure these however you want, but in general, bullish candles are either green for being bullish or white. The closing price is higher than the open. What this does is this tells us that buyers were in control. Bearish candles are red or black. This is because the close is lower than the open and tells us that sellers were in control. By the way, the green and red versus white and black, this is just a preference. I once had a student I was working with that about a week in, he told me he was colorblind. If you look at my charts, everything is red and green. That's very symbolic for me. Green represents buying, red represents selling. But he was colorblind and he couldn't tell the difference. So people who are colorblind end up using white and black. The third type is neutral candles, and this is where the open and the close are almost the same. When the open and the close are almost the same, this indicates indecision in the market. So I have an exercise for you. We're going to display different candlesticks on the screen, and we're going to ask you to interpret what happened during that trading period. Use the vocabulary of open, high, low, and close in your interpretation. So in one, what happened in candle 1? Okay, great. What happened in candle 2? Great. What happened in candle 3? What happened in candle 4? What happened in candle 5? What happened in candle 6? What happened in candle 7? And what happened in candle 8? Well, we see in one, the open and the close are pretty close to each other, and there's a big wick below. This tells us that the market opened, it tried to break, and buyers showed up and took it all the way back up. So there was demand by this tail. And the price, the open and close were close to each other. There was a very, very small candle body. We go to 2, it's the opposite. In 2, we open and we rally all day. This tells us there was buying. The buyers were in control all day. The market went out near the highs and a big full candle body. We go to 3, we open and right away we break. Again, a pretty full candle body, a little bit of wick at the bottom, but in general, the close is much lower than the open, telling us that sellers were in control. 4 looks a lot like 2. We open, we rally all through the period, We close in the upper end of the range, creating another full candle body, and the wicks are small. Then we go to 5. We open, and then we actually likely have a big break in which buyers show up and take the market back up and higher. A lot of times this is called a hammer because it looks like a hammer. Same with over here. In the hammer, the candle body's small. The wick is very big. This tells us there was a lot of buying in here. Then we go to 6. 6 is often called a shooting star or an inverted hammer. Here, we open, we likely rally, find sellers which push the market back lower and close just slightly below where we open, being more of a neutral day with selling above. Go to 7. 7, we open, and the close is above the open, so it's green. It's an okay body. It's not big, but we have wicks on both sides. So this day has price rejection below of strong buying, strong selling above. The market does close higher, but it's not crazy bullish. 8, we open, we put a wick in, and we break. Big full candle body down, go out towards the lows. Okay, so let's talk about the psychology behind candlestick formations. Candlestick patterns reflect trader emotions like fear, greed, and indecision. Recognizing these psychological clues help traders anticipate future price movements. So how can a candlestick show market sentiment? Well, long green candles show strong bullish momentum, oftentimes greed-driven buying or buying that has urgency to it. Then we can have long red candles. Long red candles show strong bearish momentum, fear-driven selling, puking, again, urgency. Then we have small-bodied candles. Small-bodied candles represent market uncertainty or exhaustion. Let's continue talking about the psychology behind these candlestick formations. Let's talk about the types of candlesticks that closes and their meaning. Strong close at the highs means that bullish momentum is likely to continue. Strong close at the lows means that bearish momentum is likely to continue. And a close near the open with a small body and long wicks indicates indecision or a transition point. So how do traders react to candlestick formations? Well, there's the infamous FOMO, the fear of missing out. This leads traders to buy long green candles at the highs. They've seen it rally all day and they just can't take it anymore. They jump in and they buy it. Then we have the opposite. We have panic selling happens when traders see long red candles and they exit too early. They freak out and they panic. They puke. And lastly, we have stop hunts, where an algo or traders go hunting for stops. And this occurs when price then creates a wick. Basically, the market trades down, hits the stop loss point. There's a bunch of puking, and then the market reverses, and comes right back up after the sellers have puked. So let's look at a case study. Here's a chart with multiple long candles. How do you think traders felt during this move? And would you have entered a trade? Why or why not? Here we go. Describe the sentiment that traders are feeling during this move. Would you have pursued a trade following this move higher? Why or why not? Describe how you might have approached a trade here. So here what we see is we see a market have a huge candle up and it has another candle up. So what's going on in these big up candles, and would you be a buyer in here? What day is today? That's right, it's Tuesday. But it's not just any Tuesday, it's Trader Tip Tuesday, where I come to you with tips like today of how to read candlestick patterns that help you take your performance to an elite level. I'll see you next Tuesday.